This is the MTPredictor weekly market update for September 7th. So I dispensed with the introductory music and all the stuff because I got a lot of stuff I want to cover, and it takes too much time to produce some of these videos. Sunday it's football season, they got a lot to do. So let's go through the markets here. Again, a lot of stuff to cover. Just a reminder that this is our 13th year anniversary for the MTPredictor software. Debuted in September of 2001, and we'll be offering through September 12th a 20% discount. It's our biggest discount of the year. Just go to mtpredictor.us, and if you want to get on the mailing list, you can enter your name and email here and click the button there, and that'll put you on the list, so you get the email with the discount links and everything. You also get the introduction to MTPredictor document. I'll show you how we use these automatic trade setups to trade and use the tools in the software to create our own trade setups based on our own analysis. So alright, commercial is done. I don't do those very often in the weekly market update, but it's our biggest sale of the year. We do this maybe once or twice a year that we discount the software. So alright, here's the NQ. We're going to go through the markets here fairly quickly, but got a lot of information at the same time. If we just check the pattern here, this is the weekly chart again of the NQ. You see we've gone wave 5 up. We've surpassed the minimum wave 5. We're heading to the typical wave 5 target, I think, which will start around 4170. 4200 is a nice round number that'll come about midway between the top and the bottom of the typical wave 5 level. Alright, so we've got some strength on the weekly on the STF here, indicating there may be more upside ahead. Doesn't mean that the market can't pull back, but if it stays strong like that, typically it'll be a shallow pullback with another new high. Let's look at the ES here. Now this is the daily chart of the ES. Remember, here was we had our wave 5 pattern here. This last leg here before we had our correction where the DP sell signal was. Again, that's looking for a potential market top and correction back to the wave 4 DP. That was this level here. We accomplished that, and then we went on to a new high, but we are now in daily. If I take a decision point off of the wave 5 swing high here, you see we're in decision point resistance on the daily chart, and this is causing the market here to take a breather. This was a pretty strong move up, and market should take a breather here. We'll see if we get some continuation eventually. If we're just going to consolidate here, we really haven't seen much selling, just kind of choppy back and forth action on in the intraday stuff. So we'll see how much longer this is going to hold as resistance. If we get a close above this level, and whatever the high ends up being, if that gets taken out, then we've got, we're going to continue higher to whatever the next resistance level is, which is a good question because we're at or near all-time highs again. Now a lot of this, are we going to crash? Are we just going to continue to infinity? Well, I think as long as the interest rates stay low, we talked about the stocks will grow. That was the saying we learned in the brokerage industry when I started out. But the other things that are happening, I was around during the tech bubble, and that was kind of an outward bubble. And what I mean was it was very public. In other words, the average person on the street was benefiting. They were participating. They, you saw movies and people had the license plate YHOO, Yahoo. I think I remember making the down payment on my first house from some options on Yahoo. So everybody, it seemed like everybody, including the cab driver in the street, was participating in that market. It was a very outward kind of bubble. This bubble to me is very different, and the bubble in the 90s there was, obviously that internet, that tech bubble, and the internet was very new to most folks. Maybe it had been around a while before, but not everybody had access to it. and it became mainstream, and there was companies that sprung up that never existed before, and it was just a very exciting time. But now we don't see that. I don't see. It's more of what I call an inward bubble, and you've got a lot of these companies, these huge companies that are able to borrow and float debt at almost nothing. And you think about the CEOs and these executives in these companies, part of their compensation is tied to the price of the stock. So there's a vested interest in there to keep the stock price going. So they're borrowing money at almost nothing and purchasing their own stock and buying it back. And that's a huge, I think, underlying, something that we didn't see necessarily in the 90s to the extent that we see today because of the interest rates. And eventually that's going to come to an end, and it looks like maybe our Fed will be winding down the QE and the bond buying, and interest rates maybe heading up next year. Whereas in Europe, I think they've cut their rate now to 0.05%, I think it is. And they are doing quantitative easing to the tune of about $1 trillion. So maybe some of the money comes out as that switch, and goes into other places other than the U.S. stock market. We'll have to see how that unfolds. I was reading an article by Robert Shiller, who's that Nobel Prize-winning economist. He has that cyclically adjusted PE ratio that he uses to determine valuation of the stock market, and he said the cyclically adjusted PE now is about 26.3, which is bubble territory. We've seen I guess the periods that we've seen in 1901, 1929, 1966, 2000, and now the PEs are at that bubble level in all those years which preceded market crashes. It's not a valid sample. It's only 4 occurrences, I think, but just something to take note of. Now in 2000 we saw that CAPE, that cyclic adjusted PE, go to 40 plus. We're at 26.3 now. In 1901 we're about right where we are now. 29 we're around 30 to 35. In 66 we're around right about a little less, around 25 or so. But we saw the tech bubble lasted a lot longer than I think a lot of people thought. The market just, every time they thought it would crash, it just continued higher. So just a very interesting phenomena, I guess. But it's like I said, I don't see everybody participating. I don't see the excitement and the giddiness of this stock market bubble that I saw in the 90s. And it's more, like I said, to me it's like an internal bubble, more of an inward bubble, as opposed to an external bubble that we had in the 90s. I guess I'll compare it to that. So anyway, S&P is in some resistance, and NQ's got a little further to go before it hits its typical wave 5. And then the Dow here, here's the daily resistance in the Dow. Let's call it 17,200. Again, nice little round number there. And so maybe some more upside there. You can see things consolidating out. The S&P has hit its resistance. The Dow, following suit here, even though it hasn't quite reached its resistance yet. So I think we got a little more upside ahead before we get everything, all the 3 indexes in resistance. So maybe one last push higher here before we get some maybe corrective action. All right, let's take a look at, pull this up here. Well, I've got oil up. I want to look at the US dollar in a second, but I've already got this chart up. So the weekly, as you might remember, the weekly chart here in the CL is short, so there's a little ABC pattern here. It was just a standard trade setup. We had a neutral trend, and it means the larger degree trend is flat or neutral. And let me just clear this off here so you can see the actual target on this particular trade setup is down here around 83, 84 in that area, and that has been the low end of that range, which is, goes from around 80 to 110. So if we do get oil, it is at some, let's take a decision point off of the wave B here. They'll have some resistance right around 90 here, but if it does get through that, we should see this target. Let's look at the US dollar, because that's really impacting a lot of these commodities, and go to the dollar index here. So here's the weekly chart. Again, the bigger picture, we had a major low here in the dollar. It was a monthly decision point low and a weekly decision point buy signal here. Put the analysis on, you see the target up here, but here's a level here that let's take a decision point off of this level here. This is a level that the dollar hasn't been able to get through, going back to this is October of 2011. Alright, but you can see the dollar has made a move here. So we had let's clear this one off here. I'll just take a decision point off of this prior swing here, and you'll see we came right into this weekly decision point support. So if we go down to the daily chart, here's that weekly support. Here's the initial rally, which we'd call a wave 1 because it starts from an important low, a major support on the larger time frame. Here's the first ABC correction. That's when Elliott said that's the best time to be a buyer. That's why this TS1 buy signal was given. And at that point, we know if this is a potential wave 1 and this ABC correction is wave 2, then we're looking for the typical wave 3 as the target. So that was a massive trade there, 23 times the initial risk. So a little $270 risk in this particular case would turn into a $6,000 profit. And you can see that the dollar surged, spent a couple of days at the target, and then surged through, and there was a huge buyer of US dollars at that point. Now here's the maximum wave 3 target. The dollar, look at the strength on the STF. We should see, in fact, we had a high volume spike here on the big gray candle, followed by a red seller's candle. So I think if we break below the Friday low, and I think that is at 83.50, we'll call it 83.57. If it breaks there, then maybe we head into a wave 4. In other words, this thing needs to take a little breather. Let's project wave 4 down. So we've got a level here. Now it's strong. I don't know if it'll get to this level, back down around 80, 82, 82.50. It might be a more shallow pullback, especially if this STF remains strong. But we should get some selling if we break Friday's low. Maybe get that somewhat of a pullback there. It does need to take a breather. It's had a huge run here, and then we'd look for or project a wave 5 up, another leg up, and then we've got to see wave 5. If they go straight up from here, we get in maximum wave 5. They're going to be testing that weekly resistance there. Alright, so we'll have to see if we get the pullback first, or if they're just going to head to this level first before we get a pullback. But if we pull back first, we'd have a wave 4, and we project we'd have a wave 5 probably coming in the major weekly resistance. Alright, so, and the other thing that we're looking at, just a little bigger picture here. Again, here's that level that the dollar has not been able to get through. We'll test that level if we go wave 5 up here, or if they go to the maximum wave 3 before we get a corrective move. But this will be a big area of resistance. It just has not been able to get through that in the last few years. If it does, you've got some more resistance up here in the monthly. but that would put us, beyond 85, up above 86 in the dollar. And if it then gets through those levels, if we look at the monthly chart, it is certainly possible, because here we had a major low here. Here's your initial rally and the first ABC correction on the monthly chart. So you've got a potential holy grail, or just like we saw on the daily chart, this 1, 2, 3. Here's your typical wave 3 set up on the monthly chart. Now it hasn't reached the minimum wave C yet. So this is that, again, that area that we're looking at, that major resistance that it hasn't been able to get through in the last few years. But if it's going to go wave 3 up here, it's going to get through those levels. So interesting, and what that means is it means a stronger dollar, and a stronger dollar means your commodities, like we've seen gold and silver. We've seen, in fact, let's look at a few of these here. Here's soybeans. Soybeans on the monthly chart was wave 5 high. We were in the minimum wave, the typical wave 5 target here. We had a DP sell signal. It's on its way here. It's pausing a little bit at the 50 period moving average here. That's where we've seen some buying step in. We'll have to see, but here's the target there, 904.50 on the monthly soybeans. At that point, we'll have to look and see if it's potentially maybe some buying. But if the dollar is going to continue higher, it's going to put pressure, and we may see this level get taken out. If this level gets taken out, here's wave 1. We're going to go to the bottom of wave 1 here and take a decision point, and that would give us another target down here. Let's look at corn. I mean, you can take your pick. A lot of these commodities. Now here was a decision point sell signal here. If I put the analysis on, this wasn't a standard, so we're right at this target here. So this is a support level. We'll have to see if the dollar does sell off into a wave 4. Maybe get a rally here in some of these commodities. But if it continues just to blow through into the maximum wave 5, it may end up taking this level out. There's another support level below here. Let's look at silver. All right, silver's gotten hammered. Let's go to not the monthly chart. I want to go to the weekly chart here. So silver, again, there's your wave 5 peak. The correction, here's the wave 4 DP here. And you can see this is a major support level here. We've got a 5-wave pattern here. Here's the wave 4, here's the wave 5 target. Each of these highs is lower than the previous high, including this last one. Alright, but we're going to have to see, again, the strong dollar is putting pressure on these. We had the opportunity maybe to see that 1750, 1760 a target here, this minimum wave 5 target that's inside this major support level. So that would mean we'd make a new low. We'd break the wave 3 low here if we do get into that level. So I've got some a put spread on there. In fact, I'm just short. Am I just short the put, or did I spread that? I forget, now I got to check. But if we get down to that 1750, I'll pick up some shares of like the SLV. In the meantime, I'm getting paid to wait. It's like having a limit order out there. Alright, so if it does get down, there should be a good buying opportunity, at least for a bounce. Alright, whether or not they were able to take out this swing high, if we do come down here and rally, remains to be seen. We may just be forming kind of a smaller, down into a triangle here. So we'll keep an eye on that. But that dollar is affecting everything else. Keep an eye on that, because the trade has been to buy anything dollar versus anything, or sell anything like euro versus the dollar, and it's been a sell. A dollar versus the Canadian dollar, US dollar versus Canadian dollar has been a buy. all right, because of that strong dollar. So it's affecting a lot of things, a lot of implications of that strong dollar or stronger dollar. All right, I've gone on probably a little too far. There's other stuff I want to get to, but I've run out of time, so I'll wrap it up here. Enjoy the week. We'll see you back next weekend.